EMs, emerging markets, are your wheelhouse. What do they want to hear from the Fed later today?
Well, I mean, the bottom line is we want to see inflation brought under control. I mean, I think that's what all global markets are focused on. And I think what's also clear is we think in terms of financial conditions, and financial conditions probably need to get tighter to accomplish that goal. This summer, after we already had rate hikes, financial conditions actually loosened in August. I think, Chair Powell's Jackson Hole speech and the CPI print in the U.S. Last week confirm that we do need tighter financial conditions. So you could say it's a bit of a painful medicine, but it's a necessary one to bring inflation under control. I think all global markets are keying off of U.S. rates at the current moment.
When you talk about taking our painful medicine, I wonder what the condition is and whether or not it is recession. Let's listen in to Leon Cooperman, who had this to say about his predictions for a recession, Cesar, and then I'll get your thoughts as well.
I'm assuming the Fed, QT, the strong dollar, or the price of oil will produce a recession. And when the recession hits in 2023, I've been very steadfast saying no recession this year. 2023 recession, the market will head to a lower level than it is presently.
There we go. So he says not this year, but next. And it sounds like that painful medicine you're talking about, Cesar, might actually be the one causing the painful medical condition, which is recession. What do you think?
Yep. Look, the first observation is, of course, that macro volatility, so volatility of inflation and growth data is very high right now. So there's a lot of uncertainty. We certainly think there's a significant probability of recession, and obviously a significant probability that the markets can price the odds of a recession from here. So we remain fairly cautious on risk assets. I still think there's the path, of course, for a so-called soft landing, although there's a lot of debate about what that really means. All in, I think risky assets, again, are a bit challenged, and I would remain underweight EM relative to U.S. assets at the current moment.